What's up crew, it's Jordan here, and in this video I'm going to show you something super amazing. This is a video I'm very excited about because I've been wanting to make it for a long time, and I finally think that this community is ready for this information. When I learned how to draw spider lines, it was a massive game changer for my trading because this literally allows you to find hidden support and resistance on the charts, and this is majorly significant support and resistance. Once you start drawing these in, you'll never stop using them, as you start to feel like you are seeing something behind the charts. Most traders actually don't know about this method of technical analysis and they don't use it, but it can be used to predict extreme breakouts and very precise reversals. From this chart, you can already see how incredibly accurate this method is of finding these hidden support and resistance levels, and I do believe it's absolutely essential. And by the end of this video, you're going to know how to draw them in yourselves step by step, as this really is something that I believe should not be ignored in crypto trading, and it's really not that complex once you learn it in a simple way. If you are trading along with us, please do use my preferred deck, which is the Apex exchange, and we do have some amazing deposit and volume milestone bonuses currently being given to us by the Apex team, and those links are in the description. Let's take it nice and slow and discuss now what exactly spider lines are. Here's a simple explanation. There are multiple trend lines radiating from a single key pivot point, like a spider web. The purpose of these lines is to identify majorly significant dynamic support and resistance in order to spot breakout zones and measure trend strength. Even if you are a beginner trader, I personally think that you can start to use this method as an asset. Before I dive into teaching you how to draw these lines onto your charts, I'm going to just break down the logic. And there really is beautiful mathematics behind this method that gives it credibility. Number one, financial markets and charts are fractalized. This is not an easy concept to understand, but it is one of the reasons that multiple timeframes work so well in technical analysis and multiple cycle analysis. Also, our markets move in waves, and angles within those waves represent momentum shifts. Also, traders react to trend lines, which gives them a self-fulfilling behavior. Spider lines can also be compared to fan lines or Gann lines if you've used those before, but I find spider lines a lot more simple and effective. Just to be clear, this is not magic, but it is structure and psychology. Once you start exploring them for yourselves, I would start on Bitcoin and Ethereum, as they have the most previous cycles to use. For the first example, and to show you how significant and important these lines are to use, I'm going to go back to our 2017 bear market and the bull market that started from 2020 all the way up until 2021. One important thing to keep in mind before you start is to make sure that your charts are set to logarithmic scale. Logarithmic price charts are very useful for high volatility and exponential growth charts like crypto. Linear charts show absolute price changes, logarithmic charts show percentage changes, and this makes them superior for identifying true trends over long periods of time. The first thing to do when drawing spider lines, and this is the most tricky part, this is what I struggled with at first, but if you can wrap your head around the logic of finding this first point, the rest becomes very, very easy. And this cycle does make it particularly easy because there was a very large pivot point right in the middle of the smile curve. So let me break this down for you in very simple terms. We are looking for a strong major high or low swing point in the middle of a downwards and upwards curve like we see right here in this example. Spider lines can be used anywhere that you find this kind of pattern. And once I've explained it on this example, we're going to go to the next cycle and draw them in so we can use them on current price action. So once you have identified your pivot point, and this acts kind of like a seesaw for your lines, then it becomes very easy. Our pivot point is the top of this wick right here. Very important to make sure each of the lines that you draw come from that exact same point. To draw in these lines, we're going to be using the extended line tool. This is also very important to make sure you are using the right tool here. Add it to your favorites so you always have it at easy access. Once you've selected the extended line tool, just click right on the top of the wick of that pivot point. Then your line will extend to the left and the right. Now is where it gets interesting. On this downtrend on the left, we're going to be selecting strong reversal points. And the way that we select those is by finding the tips of wicks. So because this is the first time for many of you drawing this in, let me quickly go into more detail about finding these wicks. This is our downward sloping trend line before our pivot point. Looking at this chart, we can clearly see where the wicks are. And these are our levels to take into consideration. It's a matter of preference how many lines you choose to draw in here, but I would recommend going into quite high detail because the lines do expand. And you want to have as many of these beautiful, significant support and resistance trend lines on your future price action so that you can use them for breakouts and reversals. So for the sake of this demonstration, I'm going to go into quite high detail. So let's draw our first line. We take our extended line tool and we drop it in right at the top of the pivot wick. Try to be as exact as you can, but this will take some learning. So first we take it to the tip of the top wick on the left trend. Then we take another extended line, try to take it from the exact same point, and move it down to the next wick tops that you can find. And then keep performing this same thing, each time coming further down and finding the next major wick top. This might seem tedious, but it really doesn't take that long, and the information that it gives you is brilliant and it literally lasts for years. What I would recommend is taking a chart that you don't use for any other analysis, like this index chart that I am using here. Draw in your spider lines and then leave them in on this chart for future use. Again, it's up to you how detailed you want to be, but at least try to catch the tips of the biggest wicks. All right, so I'm going to go in and draw in the rest of these spider lines. All right, and it really is as easy as that. Now you can see that I do have very intricate and detailed spider lines drawn in on my charts. And if we go forwards to future price action, we can see that in the previous bull market tops, these lines were absolutely beautifully significant and accurate for support and resistance all over the show. It really is an absolutely amazing method, and you can see this right now for yourself. It is really useful to have this chart to be able to check back at all times if you are around a spider line, because that spider line is very likely to give you very strong support or resistance. And this is, of course, one of the key checklist factors to any trading plan, understanding the key levels at current price action. And even moving further forward in time, here we can see how incredibly accurate current price action is adhering to these support and resistance lines, even though they have been drawn from the previous cycle. This is just the beauty of the spider lines formula and how it works so nicely in conjunction with the fractalized nature of our markets. Okay, so let's move forward in time now and draw these lines in on our current cycle, which will give us the most significant lines to use in our trading. Okay, so here is our current cycle on the weekly chart on a logarithmic scale. This one is slightly more tricky as the pivot point is a little bit more difficult to identify, but actually it's still relatively easy. Here we see the smile curve of our previous bear market and bull market kickoff, and right in the middle of that we can see a major swing high. This is the point that I'm going to select for my pivots in this example. So space out your chart nicely to give you a lot of room, and then start drawing in your extended lines. Make sure that you connect them to the most significant wicks on all of your previous price action in the prior trend. Alright, so as you can see, that takes under 5 minutes to do. And now moving forward to current price action, we can see just how significant these lines are and how important it is to draw them in onto your charts. If we go down to a smaller time frame, like the 4-hour time frame, we can see just how uncanny some of the reversals are at these exact lines. We can also see breakdowns below these lines, and this forms part of the strategy around using these spider lines within your trading plan. So when you are trading, even on lower time frames like the 4-hour, the 1-hour, all the way down to the 15-minute or 3-minute, it's very important to be aware of when there is a spider line nearby, so that you know there could be very strong support and resistance at those levels. On this chart, we can clearly see the different ways in which you can use these lines. You can use them for bounce trades and even breakout trades. Here is a spider line acting as support and resistance and being flipped at the breakout into support, which offers a nice trading opportunity. So looking at current price action here on Bitcoin, we can see the spider line that the current range is coiling around. And we can see that extreme support and resistance directly in confluence with the spider lines that we have drawn in. And we can actually use these lines as potential trade entries as long as we do find confluence with other indicators and keep our risk management tight. Of course, please use these lines in confluence with your other indicators such as your SMC order blocks, your market cipher, your RSI and stochastic RSI, your Fibonacci, or anything else that you like to use to find your entry confluence. A few common mistakes here that you can fall into is overdrawing too many lines. Try to find significant wicks while you are drawing in your lines. And of course, picking a weak anchor point. That does take practice, but I think I've explained it in a way that will work for you. And make sure you are using a high time frame like the weekly time frame to draw in these spider lines. Of course, also do not treat these lines as a guarantee, as no form of technical analysis should be used as an island, and you should always find confluence. A few quick pro tips from me. Combine these lines with your market structure, and this is where SMC is very powerful. And keep your risk management very tight when trading these lines, as price can become very volatile in these zones. If you found this helpful, like and subscribe, and let me know any questions in the comments. And if you need more info on trend lines and support and resistance, watch those videos in my crypto trading tutorials playlist. That link is in the description. As always, please remember to play from a position of power and strength, use your stop loss, and do not get wrecked.